Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday, there are no important economic headers to be released from the United States. All what you get to do is to watch for the US dollar movement, which is supposed to be strong, and watch also for the US equities movement, which is supposed to be weak. That's all for the economic calendar. We will have a look now at the numbers. On the last trading session of Friday, we have had a trading range from 1484 to 1493. Numbers are rounded and the market is closed. Gold spot printed a closing price on the last trading session of Friday above 1490. The number is rounded and the market is closed. Gold is trading in an uptrend above its all daily simple moving averages, except the 20 days and the 50 days daily simple moving averages, and the momentum is seen weakening. For the RSI readings, it's moderate on all the charts, 67 weekly, 63 monthly, and 47 daily, and the supports are seen about 1483, followed by 1477, and then 1459, and for the resistance levels, it's seen about 1497, then 1500, then 1510. That's all for the numbers. We'll move on now to the trading strategy. Hi again. When we look at the fundamentals, we find out that the pessimistic view we have had about the economy 2 months ago just turned around 180 degrees, and again we hear the same positive speeches from every corner in the world that things are going to be fine. Even some argue that things are going to be better than before. From the Brexit ease to the progress in the trade talks between US and China, add to that the calm geopolitics in the Middle East, even North Korea became a source of hope and an inspiration. In my opinion, this is all bullshit. The world is not a safe place and it's not going to be a safe place overnight. And the financial system is somehow lost its trust, and it needs to be taken down and needs to be replaced with a brand new financial system in order to gain the trust once again. You got to keep this into your mind as the general fundamentals that controls the markets. Any show off of a move toward the risky assets is just a short-lived one. However, at the end of the day, I'm a trader, and the buy and sell for me are equal, and both of them is one click away from my finger. At times, like what we have right now, we do refer to the technical analysis to minimize the noise. And mean by the noise of this peaceful, promising talking about the economy and what we are hearing right now about the labor market in the United States, and about the progress in the trade talks, and about the Brexit. However, we look at the chart to find how the reality really looks like. Because in life only two things does not lie: numbers and behaviors. Look at the daily and the basically weekly chart of gold. There is a very clear bull flag promising of a move from 150 to $300 to the upside. Let's assume that the gold chart is not clear. Look at the treasuries chart. It points for a rally, which means, as we said in our last videos, that yields are going to fall in case the treasuries rallies again for a new high. And this means the yields will fall for a new low, and which suggests that gold will print a new high. Sure, I'm aware that fundamentals right now does not support or point to any kind of fears that will slip into the markets at the moment, but charts are telling something else. In the charts there is, especially of gold, there is accumulation behavior in the chart, and there is a defensive behavior in the chart, which is something you should not neglect. However, gold needs to break 1511.20 for to start any new rally, and to break 1475 to start any break down. Sure, I'm buying, and I will buy any dip in gold. I advise you clearly to buy. That's all for today. Thank you, guys. I'll see you tomorrow in another video.